It was stuck on the lower band of around 20%, but right now the band has opened. It's down 22%. In fact, the stock for a brief period fell below the 700 rupees mark, which is the lowest that we have seen since 2020. Now, if you look at the market cap loss that we are seeing for IndusInd Bank, it's more than 15,000 crore rupees, and this is because of a 2,100 crore accounting discrepancy that has come in, which will hit the profitability of the bank by around 25% as per Citi. They are saying that the hit on earnings will be around 25% because of the derivative positioning, which will knock out the earnings and the net worth of the bank. They are also saying that the recent developments have raised the risk perception and impacts disclosed borrowing cost as well. And they're also saying that the bank trades below the FY26 book value, and this is because of the near-term uncertainties that we are seeing. So there are multiple headwinds that are now coming in for IndusInd Bank. Firstly, is the fact that the CEO tenure expansion was lower than what the street was estimating. The street expected 3 years, but it came in just 1 year. Then this net profit hit that has come in because of an accounting discrepancy. Then analysts are also pointing out the fact that the credibility that IndusInd Bank has lost because of these factors is something which will take much longer time for the bank to regain from the market. And again, there is the MFI issue, which will lead to elevated slippages in the fourth quarter, which will lead to asset quality issues as well. And there are multiple queries on IndusInd Bank as well coming in from our viewers. First one to address is from Shivam from Kolkata. He's holding around 110 shares of IndusInd Bank at a value of around 1,043 crore rupees. He wants to know whether should he add after the downtick of 20% that we are seeing this account seeing a 20% after seeing the 20% downtick in the counter, or should he just exit IndusInd Bank at this moment? So firstly, let's go into our fundamental guest, Astha Jain, the senior research analyst from Hem Securities. Astha, what is your view on IndusInd Bank? Do you think one should continue to hold IndusInd Bank after the 22% downtick that we're seeing in trade today?
Hi, good morning to all of you. See, talking about this counter, I think now the way this news has come, it will have an impact on its net worth also. And we have seen that the earnings will definitely going to impact. And there can be earnings, cut also, because the way this news has come, definitely it will impact their net worth by 2.5%, and relatively it will have a earnings impact also. So I think going ahead also, this bank will, the stock will continue to move in the southwards trajectory. So idea here is to take out the partial losses and remain invested in the partial quantity, because here the losses are high, so I cannot advise to book whole sort of loss, but partially loss booking can be done at the present moment of a time, because the kind of downgrades are coming. I think definitely going ahead also this financial performance will get a big hit, and that will impact the stock price momentum in the future outlook also. So all in all, partial exiting and partial staying invested in the stock price is recommended at this point of time.
So, Astha, when you're suggesting that partially one should continue to hold this counter, does this mean that there could be a possible upside on the share price going forward?
So what we are expecting that some management clarification should become in this regard, because it is ultimately the clarification from the management side which can give some sort of relief to these stock prices. So just on that belief or just on that hope, we are recommending to remain invested in this counter, because maybe if some clarification come, then definitely the stock price can again move in, or may move some sort of upside momentum can be seen. So I think then those can be the level where one can exit fully. But right now, in such kind of a downward momentum where the stock prices are already down by 20%, there is no logic to exit the whole quantity.
Coming to you, Swati, a technical guest for the day from Nirmal Bang. How are you looking at the charts? Obviously, the charts might be a bit, might not be giving you a right picture at this moment, given the 20% downtick that we have seen, right?
Correct. Yes, you have rightly pointed out on today's intraday basis itself, the stock is down by more than 20%. And I believe such kind of a fall will likely to be continued in the near term. But for the today intraday purpose, we have already seen a huge losses in this particular stock. No need to book the losses at the current market price. As Astha also said, we are looking for the management talks, clarifications. And I believe the downside is limited from here onwards. If the positive news comes from the management side, I believe 680, 670 levels can be seen as a maximum depth on the downside, and from there onwards we're likely to witness some sort of a reversal after some consolidation phase. So no need to worry. The long-term horizon or the long-term client should definitely hold on this particular stock. Let the stock settle down, let it digest some negative news, and after that you can take a call about the exit positions, but not at the current market price.
Got the view, Swati. Now